Never run out of battery again with the INIU portable charger, the slimmest 10,000 milliamp hour power bank that keeps your devices charged on the go. Stay powered up wherever you go. Click the link in the video description to shop now on Amazon.
Welcome to Trega, where we dive into the world of finance and economics. Today, we're looking at the stock market's latest move, a notable rise in both the Dow Jones Industrial Average and the S&P 500. But what's driving this upswing? It turns out that the personal consumption expenditures inflation data met expectations, and investors are breathing a sigh of relief. The PCE price index is a crucial measure of inflation in the United States, tracking the prices of goods and services consumed by households. And according to the latest reports, inflation remained stable, with the core PCE index showing a modest rise. This stability is viewed as a positive sign, indicating that inflation may be moderating after a period of significant increases. Investors are reassured that the Federal Reserve may take a more cautious approach to interest rate hikes, further supporting stock market growth and enhancing the overall investment climate. Now, let's take a closer look at how this is impacting the markets. The Dow Jones Industrial Average, which reflects the performance of 30 major publicly traded companies in the United States, experienced a notable increase today. This growth can be attributed to a combination of factors, including strong corporate earnings reports and favorable economic indicators. Investors are particularly pleased with the performances of companies known for their stability and dividends, such as Johnson & Johnson and Procter & Gamble. These stalwarts have contributed significantly to the Dow's rise, underscoring the critical influence of economic data on investor sentiment. The S&P 500, which encompasses a broader range of 500 companies, also witnessed gains. This index is often viewed as a comprehensive gauge for overall market performance, and its uptick today signals positive sentiment among investors. Tech giants like Apple and Microsoft are among those driving the growth, reflecting the continued strength of the technology sector. Of course, not all sectors have fared equally well. The technology sector's resilience is particularly notable, with companies like Nvidia and Alphabet showing impressive earnings growth. On the other hand, areas like utilities and real estate experienced more modest growth, prompting investors to approach them with caution. As we navigate this complex landscape, it's essential to consider the Federal Reserve's stance on interest rates. With inflation data meeting expectations, market analysts predict that the Fed may adopt a more cautious approach, leading to sustained low interest rates. This environment typically benefits equities, as lower borrowing costs can stimulate corporate investments and consumer spending. But what about global economic conditions? Economic slowdowns in major economies, such as the Eurozone and China, can impact U.S. export levels and investor sentiment. And let's not forget the geopolitical tensions that are constantly evolving. Fluctuations in oil prices due to tensions in the Middle East can significantly impact inflation rates and PCE data. Despite these complexities, the current market sentiment appears bullish, driven by the recent PCE inflation data and solid corporate earnings. Investor confidence is bolstered by the potential for continued economic growth and the possibility of a soft landing, where inflation decreases without triggering a recession. However, analysts caution against complacency. The unpredictable nature of economic events can significantly impact market performance. Investors must remain vigilant and consider diversifying their portfolios to mitigate potential risks. As we wrap up our analysis, it's clear that this PCE inflation data has sent shockwaves through the financial world. And for investors like you, understanding these dynamics is crucial for making informed decisions. At Trega, we're dedicated to bringing you timely insights into the world of finance and economics. Stay ahead of the curve with us. That's all for today. Thanks for joining me on this journey into the stock market's latest developments. Don't forget to like and subscribe for more engaging content from Trega.